The markets have been very volatile since Brexit, of course, on the pound and the euro dollar. We're going to take a look at the upcoming week and weeks with these four currency pairs. But before we do that, be aware that this video is shown to a global audience, may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only. Plus, by continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. When the Brexit result was slowly but surely coming forward and of course showing that the Brexit voters were gaining momentum and eventually won close to around 52%, the pound dollar started to fall largely from 150 all the way down to roughly 132, about 1800 pips in a matter of hours. And we can see that that fall has broken these bottoms, these support levels that have lasted already for years and decades, in fact, have now been broken. So what does that mean? Are we expecting, or do I expect basically a continuation? Here we see that huge daily candle. And if we then zoom into perhaps like the daily chart, we can see that the close is not very near the low. That's not so strange considering the volatility throughout the day. But yes, I do expect a follow through of this bearish momentum to lower lows. If I look at the 1 hour chart, for instance, just to give you an idea about what's going on there, what I look at basically from a wave perspective, I'll just use that concept for now. 1, 2, 3. I think we do have the ability to see wave 4 and at least one more push for wave 5, and that wave 5 could become extended. We could have 5 waves within that 5 waves. So yes, I do think it's bearish. Now that outlook would change if price were to break below the above the low here of wave 1. Now that low, I'll tell you exactly, is 142.72. So I think 142.50 is a key level. Any break above that, certainly changes my perspectives. I'm less bearish and I'll be neutral and reevaluate my analysis. Anything below that, I'm still bearish, and you can see price stopping at the 50 fib right here, close to 140, and turning around. We could see a triangle like this, perhaps even a dash up to the 61.8, but I would expect the 61.8 to be a turning spot for more downside. Or if we do get a triangle, if we connect the bottoms here like this, for instance, you can see support and perhaps even resistance like that. But if we do get a break above that, I think that price could also turn at around 137.50. We could maybe see a bigger triangle like this. A break of that support, of course, would then lead to a breakout to the downside, a bearish breakout, and a further fall. So all in all, a breakout, a turn at 137.50, a turn at 140, or a turn at 141 seem to me the most likely scenarios for downside continuation on this pound USD. The target, the minus 272 target at 128, perhaps even lower. 125 is a big Fibonacci level from higher time frames. So for the moment, I would say 128, 127.50, and 125 would be the downside targets of this fall. Now, that doesn't have to happen this week. We have to see there are a lot of turmoil regarding politics and economics and markets and a lot of things that are going on at this moment. So we don't know how the markets are going to react from that point of view. Price could just stay in this range for a couple of next days and basically build a triangle. And the break could happen next week or maybe later this week. That's something that remains to be seen. But for the moment, anything that stays below the 61.8, specifically the 142.50, I think it's bearish. And the break or the turn could be the continuation of the pound USD downside. Now, from a trading perspective, we're going to discuss more setups basically with Nenad tonight, weekly FX recap, his expert opinion on momentum trading on Wednesday, by the way, and our Fibonacci part 2 on Thursday. But otherwise, we still have more trading room webinars on Tuesday and Wednesday. We're taking a look at fibs and zigzags and pattern trading on Wednesday. The euro dollar also made downside, not as much as the pound, but also following suit. Dollar strengthening here and breaking these two trend lines. So, this is going to be very interesting on a weekly perspective. Are we going to see the continuation basically of this bearish momentum continue? We had a solid consolidation like this. Price, however, was not able to break these highs here. Every time price went into the 114, 115, max 117 zone, it basically used that as resistance. Time in and time over, price found resistance there, and it did again last week, turned at 114-ish and made a downside all the way to 109. All right, roughly. So yes, this could be the end. We had a sizable correction, which could also be a wave 4, and this could be the start of wave 5. There was a bit of wick here too, but it's certainly possible that this is the start of wave 5. 108, very important though, a break of that, and of course the bottom would kind of confirm that downside. So if we zoom in back to these time frames, you can see that we still have a while to go before we get another confirmation of this continuation. But we did break these trend lines, so from that point of view, I think that bearishness on the euro dollar is just as likely as the pound USD. We might see a zigzag, and this zigzag could go deeper than the pound USD. Relatively, as I said, the pound I don't think will break the 61.8. But with the euro, we see some good momentum here, stopping at the 50 fib, and that momentum could basically generate a zigzag like this. Let me show you. This is part of the zigzag A. This could be the B, and we can see a C up to these targets, like 272 target at 112.50, perhaps even shooting up to 113, 113.50. And these could then be resistance levels. I don't expect a break of this particular high, the turning spot at 114.25. If it does break above that, the bearishness is invalidated. For the moment, though, I'll be keeping an eye on short positions anywhere between 112.50 and 113.50 for turnaround with my stop loss above this high top, unless I see good candlestick confirmations like an engulfing twin, and I might use then the shorter stop loss above that pattern. All right, target, well, when we zoom into the daily chart, any turnaround at 112.50, I think the natural target for this week would be 108, just a bit above 108, because that is a big support level, and we've seen multiple respect for that level. But I wouldn't be surprised that in the long run that level breaks. But for the moment, of course, this is the level that could definitely cause a serious retracement and a serious bounce. Now the dollar yen, you can see, is retracing as well, and basically making a zigzag potential, and that basically could follow the euro dollar pattern here, in the sense that I would also expect a zigzag up to these targets. Now it's a bit different on a higher time frame perspective, because if you look at the monthly, you can see that we're at the 50 fib of that enormous move up from 75-ish to 125. We're about halfway, 100 level as well. That could easily be a bouncing spot. So from this perspective, price could continue with the downtrend we've seen, but it is facing a major level as well from a support zone. So if it does break that support level, price could go to the 61.8, 95. If we do see a bounce, then I wouldn't be surprised either. And in that case, we could see a turnaround after that 50 fib from the monthly chart. For me to have a bit more confidence in that upside that we are bouncing off that 50 fib, I would probably need to see price break above this top, 106.50-ish, or I would need to see a clear higher low here, all right, to show a bit of a pattern that we're building a trend channel. That too could be kind of a first indication that the dollar yen is indeed turning at 100, is indeed turning at the 50 fib. Last but not least, the AUD USD, big wick at the top, but ultimately closed bullish. And that's, of course, a huge difference with the pound and the euro dollar, is that we see a bullish candle. Now, of course, there was a strong downside momentum, but we do also see a big wick indicating support. So Aussie a bit different, not as bearish as the other two, and therefore in this uptrend channel, but all in all still in a bigger triangle. So it seems like we're, the Aussie is bouncing off support. Not something that I really find very interesting to trade at this point, but if price, it's so kind of mixed with different momentums. We get up, down, but ultimately, if price were to retrace back down to the support, I think that could still be an interesting bouncing spot for upside. If price builds a triangle like this, a breakout could still be interesting for upside. From this perspective, Aussie has a bit more perspective for upside than the euro or pound. If this channel breaks, of course, then we could see the Aussie fall too, but there is little space before we hit another long-term support level. So either way, it's going to be tough trading on the Aussie. From my point of view, I think the best potential trade could be back to support. And I'm talking about basically, why don't we put even a, let me use a fib here actually so we can see what level that is. Right there, here it is, 73.50. Stop loss below 73, like 72.90, with a target at 75.60. That could be a great R2R trade, and that could be providing a lot of potential there for upside bounce at the trend line and the 78.6 fin. All right, make sure to take a look at Avon Markets MetaTrader 4 Supreme Edition. A lot of extras, a lot of plugins that you'll love, including that mini terminal, so that makes trading a lot easier. Also take a look at our analytics and hopefully our webinars, and see you soon. Good trading.